Good morning, and thanks for tuning in to Stocks to Watch on BloombergQuint. I'm Mathew. The question on a lot of minds today at the start is going to be whether the Nifty breaches the 13,000 number. We're not too far off, and in fact, we'll know in a very short while. But in the meanwhile, let me take you through a couple of stocks or a few stocks that you have to watch out for in trade today. My guest is Mayuresh Joshi of William O'Neill. Thanks so much for joining me, Mayuresh. And I know everyone's going to be looking at that headline number. Unfortunately, there isn't a lot of news-based developments to ask you about. I still had to, dredge out this Gartner report that spoke about Indian IT spending in 2021 and the fact that it is pegged to rise by 6% in 2021. I know that there are not a lot of Indian IT companies that focus inwards, but at the same time, if you're talking about the 2020 spend at $79.3 billion and you're seeing that rising by 6% in 2021, are there any companies that would benefit from that, and which would be your pick in the space?
Morning, Alex. Thanks for having me. So largely, I think for the sector as a whole, right, the spending is expected to increase in lieu of what has happened because of the pandemic. So a 6% growth as per the Gartner report in terms of the IT spend domestically. Even globally, I think the IT spend is expected to increase quite significantly, and that might happen across sectors. So BFSI, which are one of the largest contributors to the IT spending, healthcare, mobility, retail, manufacturing, and you'll see a lot of traction happening from the end user perspective. Now, specifically, I think companies which are focused on the Indian IT spend, I think a lot of these companies would have some reasonable share in the IT space as far as Indian system is concerned. But for the company as a whole, I think constant currency spending, what they've probably done and managed in terms of keeping their costs under tab. And because of the non-travel issues of the pandemic, I think a lot of the optimization that happened on the EBIT front was very, very evident. Secondly, I think the entire concept from work from home will improve earnings for IT companies because of savings on the rental part. Therefore, I think the top tier companies is something that we should probably be looking at. From an IT ecosystem perspective, on an Indian context, I can only think of companies which are probably going into the educational space. So NIT, Aptech, which are the education aggregators and providers, corporate learning solutions. I think those are something that I can think of. But my focus would still be on the larger IT companies in that space.
If I were to nudge you to give me a name or two and your picks in the larger IT space?
So Infosys, TCS is something that we have recommended. I think this is something that, as a disclaimer, is something we've done in the past as well. In the mid-cap space, again, I think a lot of move has happened in a whole host of companies. So Tata LXI, LTI, I think have moved quite significantly. But something that we like, as a clear disclaimer, which we have just given out a couple of days back, is First Source Solutions, where our belief is that the earnings growth in constant currency between 10 and 12, what the management has pegged, the EBIT margins holding between 11 and 11.5, ample cash on books, BFS at 51% of their overall contribution, communications at 18%, and the entire ratings on our O'Neill methodology. The EPS rating looks very, very good. The RSI rating is fine when you're looking at holding. I think that meets our excellent parameter as well. So I think one growth stock where earnings momentum can continue from the mid-cap space. And as a disclaimer, I think we've distributed this to our clients as well.
All right, fantastic. Now, in the automotive ancillary space, and this has been spoken about ahead of the festive season in the same breath as a possible revival in the auto sector. Now, the latest development with regard to Motherson Sumi, which is one of India's largest auto ancillary companies, is the analyst call, Mayuresh, that was recently conducted, I believe, over the weekend. And that led a lot of analysts to re-rate the stock. They've said that in Vision 2025, they plan to raise consolidated revenue to $36 billion. And they want to diversify and ensure that there are no pockets of, concentration. So I think that would be a positive for this company, which has had problems with that in the past. They've said that no country, customer, or component will account for more than 10% of overall revenue. So what, according to you, did you like in that analyst call? And do you also believe that this is a stock to add to the portfolio to watch very closely?
So three things, Alex, that's call for Motherson Sumi. One, in terms of their Vision 2025, an ambitious 35% revenue growth, 40% ROC target, but diversifying into new industries. So what they're probably looking at is industries like aerospace, health, and that would contribute close to around 25% in the next 5 years, is what their take is. The second element is that the funds will largely come from internal sources. So they're keeping a very, very close tab in not letting its net debt to EBITDA move beyond 2.5%. That's another positive that I see. The third is the existing order for SMP, SMR, and that's quite substantial. And the utilization of the new USA as well as Hungary, and the expectation of maintaining their EBIT margins with utilization ramping up because of the industry contribution. I think those three things probably might hold up, which might affect the free cash flow yield and the dividend yield coming back to 1%, which will be a laggard program. So again, I think what Mathew is expected to do, I think based on their vision, I think has been taken very, very positively by the street. Our own internal ratings suggest that earnings still remain poor because of the backdrop of what they have witnessed in the past few quarters. So it's more hope in terms of all these elements playing out in the next few quarters. The other elements in terms of distribution holding going up, in terms of strong balance sheet as per our ODL ratings, still remains strong, but earnings catch-up might happen over the next few quarters, which the street has probably started factoring in right now. So anybody holding on as per our ratings and philosophy might hold on to the stock, but to watch out and wait for numbers to probably start improving over the next few months.
Okay, watch out for the print to actually showcase some of those improvements that are being forecast by the management. The last counter, IDFC First Bank, and this is a counter that met with a lot of excitement when the merger or the listing happened of the merged entity. But it's not really lived up to that initial anticipation, right? We saw the stock rise significantly in yesterday's trade, and perhaps that had to do somewhat to the RBI's working group's recommendation with regard to promoter shareholding. What is your view on this stock? And I'm only asking because this is perhaps one of the largest gainers in yesterday's session. And would retail investors have to, be a little cautious when it comes to this counter?
So again, it's panel recommendations. So that's point one, right? So what happens in terms of the next few months of acceptance is something to be seen. But again, I think the news has been taken very, very positively, and there are no two ways about it. Secondly, I think in terms of the core numbers, because if you probably look at the panel recommendations for all these companies under consideration, and assuming the holding company as well, IDFC, if the entire structure has to get collapsed, the holding company in the first place has to get rid of its asset management business, because you can't have ancillary businesses running when you are trying to collapse the structure. In that case, I think the reverse merger and the holding company discount for the holding company goes out. Similarly, I think for companies like these, I think the entire intermediary structure of cutting your stake down actually goes off. But again, I think it's a factual thing. I think for all these things to happen, I think for IDFC and its parent, I think all these things have to fall in place over the next few months. So I think it's something which is played out sentimentally. Number-wise, I think improving. I think the entire scope for IDFC First Bank in terms of advances growth, in terms of how retail will probably start coming back, in terms of their CASA accretion, in terms of provisioning and the asset quality pressure slowly start coming through the next few quarters. So I think it's a wait and watch, because our methodology is not giving clear indication in terms of growth and buy. The ratings are still probably on the softer side as far as CAN's limited.
Fair enough. All right, and that brings us to the end of this conversation, Mayuresh. Already looking forward to the next one. Perhaps by then we'll have reached the 13,000 number. Thanks so much for joining me this morning. And to you, dear viewer. And to you, dear viewer, do stay tuned. It could be quite a momentous day in the Indian market. You'll find all the updates on BloombergQuint.